These are the only basic tools to start with by analyzing the market in technical analysis. Welcome to the Trading Focus once again. In today's video, we are going to explain the perfect tools to start with in technical analysis, which will give you the strong signals to buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, like the video, and leave the comment below, and we'll see you in a minute on today's video. Okay, welcome back. So in the market, we have so many different tools to start with by analyzing the market. Knowing how the price moves in the market by using the technical analysis tools to analyze the market that will give you a stronger confirmation to indicate the prediction of the next movement of the market. So those are two tools that we need to start with. Okay, so now remember, in the market, or generally in the financial market, we have to buy and sell in the market. That is one. So let's say we are moving from home, we are heading to the market. Generally in the market, in our daily life, I'm going to buy something from the market. At that point, I'm looking for something that is dropping in the price. Okay, let's say I'm going to be buying like a trouser. So if I'm going to buy with a trouser, I'm going to be looking for the trouser which is in the low price but with the high quality. At that point, I'm going to be buying when the price is low, and I'm going to be selling when the price is high. So you have the shop of trousers. So now you are expecting the customers. When the price goes high, that's when we are going to be making money in the market by selling on the high price. So in the market, we have two tools to use to analyze if we are going to be buying or selling. The first one is the support, and the second is the resistance. So when we are buying from the low, and when we are selling from the high. So the lowest point where the market reaches before reversing or changing the direction to the upside or moving to the buying position, that is a support. That support, imagine like in your house where we are standing on the floor, that is a support. From resistance, remember, we are buying when the price is dropping and we are selling when the price is high. So from the high, by dropping to the low, we are moving from up to the low. So the highest point, that is a resistance. Resistance is the highest point in the market where the price reaches before changing the direction or reversing to the downside, before deciding to move for selling position. Okay, so in the market, when we are buying from support, and when we are selling from resistance. When we are buying, we are moving up, and when we are selling, we are moving down. Okay, remember and keep this in your mind. We are buying when the price is dropping, and we are selling when the price is high. That is generally the way we use in the market between buyers and sellers. So let's look on how can we use support and resistance, or how can we use the low and the high points to predict the direction of the market, or to sell and buy from there, with the purpose, remember, of making the money in the market consistently. So now we have a support from the low. This is a support, and this is also a low, and this is a resistance, which is a high. So we are buying from the low and we are selling from the high. Okay, when we are moving up and we start losing momentum from the areas of resistance, that's where we are going to be deciding that the market is going to be dropping. The sellers are going to be controlling the market. So from the low, that's why we are getting ready to expect the market to change the direction of the upside. So that's where we are standing to wait for the market. Then we are going to be deciding to buy from this area, anticipating the market to move to the upside. Also, again, the history repeats itself in the market. When we are buying from the low, the target will be the high. When we are selling from the high, the target will be the low. So that is support and resistance. So in the market, remember, we use the candlesticks. Okay, so from where we are standing to move up, that's where we are going to be looking for a bullish candle, and from where we are waiting to sell from, that's where we are going to be waiting for the bearish candles. Okay, here we have a support, okay, from where the bullish candlestick is standing from. When we are moving up, or we are going to decide to enter in the market, remember, we look for the bullish candlesticks. So where the bullish candlestick open from, that is the lowest point. That is a support. That's why support is very important in the market. So from where we are buying from, the market to move in the uptrend, that's where a bullish candles start from, and that is a support. From where we are selling from, we appear the bearish candlesticks, where the bearish candlestick open from the high. From the high, that is the point of resistance. So when we are moving down, we need to see the candlesticks of the bearish candlesticks to move the market downside. And when we are going to be buying, we need a confirmation of a bullish candle to be buying from the low to the high. Okay, so let's say we are in the market now. Let's take a look on the chart. Okay, now from the chart, we have the market that we created as support from this area. So this is the lowest point where we started buying from, or where the bullish or buyers started controlling the market. And even we are now from the high. We are from this area, which is the highest point, which is a resistance. So now we are dropping down, as we can see. As we continue moving down, we are going to be waiting from the lowest point, where there is a high probability for the market to reject from, or for the market to start showing us the signs that we are going to be changing the direction and move on the buying position. Okay, so the buyers were expecting to be controlling the market from this area by moving up to the resistance. So now, let's now see how the market plays this. We are now moving down. So from the downside, we need to start seeing a reaction from this area, this support. Okay, so dropping down. So as you can see from our previous videos, we talked about the candlestick wick. As we are moving down, the candlestick started losing momentum. So you can see this candle, this one is smaller, and even from the downside, we started seeing some kind of rejection from the downside, from the lowest point. That is a support. So we are waiting a reaction from this area, but with the confirmation, we are waiting for the bullish candle. So let's see what happened. Trying to reject from the low, the candlesticks are so small. This is a sign that the sellers are losing energy to control the market. Okay, so now we are still dropping, but finally we got a candlestick then which has a long shadow on the bottom, and that's showing that the buyers are now going to be controlling the market. The sellers try to push the market down with this candlestick, and then we end up pushing up and close bullish. That is the sign that an even is an opportunity for us to look for buying. So we are buying from the low, that is a support. Okay, we are taking a buy from this candle. The stop loss is below the support, is below the low. Okay, so now the target is from our highest point, because we are expecting the market to be rejecting from the high, and that high is a resistance. We have so many different kinds of resistance even inside the market here, so there's a high probability for the market to be rejecting from those area and changing the direction also to the downside, and that's where the sellers are waiting to be driving the market down again. So let's see what happened with this trade if we got the target and taking some profit from this trade. Okay, we moved up and up, rejecting from this area, and then we got to our target. So now you can see the market moved from the low to the high, and the target was from the highest point, that is a resistance. The reason our target is from the resistance, that's where there is a very high probability for the market to drop from, or that's where the sellers are waiting from to be taking the market down. So now let's take a look at an example from the highest point, that is a resistance, where the sellers wait from to take the market down or to control the market by moving down. Remember, the bearish candlesticks will appear from that area. Okay, now we have the market that is trying to move up, but we have also, this is the highest point, which is a very strong point to wait from for this. That's where the sellers are going to be waiting from to take the market down from this area. We are going to be expecting the market to be telling us that the sellers are going to be controlling the market. And even we have the lowest points. We have this one, okay. We have internal area, which is this one. Also, there are also different kinds of small lows. This is a low. That's where we take TPs, different kinds of TPs. This is a support, 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 support. So that's where we are expecting to be taking our TPs, and even the target will be from this area, from where the point or the lowest point will be strong. This one is stronger, and even this one is strong. So let's take a look and see how the market played, or how the market reacted from this area if we change the direction to the downside. Okay, let's see what happened. Let's wait for the reaction from the upside. We are still moving up. Okay, now we started indicating that the market is going to be dropping to the downside. So we need more confirmation of the bearish candles. Okay, so now as we continue, we got another bearish candle. That's why we are going to be selling from, taking a short from this area. The stop loss is above the previous high, is above this high, and then we are expecting the market to be dropping to the downside. This is our TP, and even from this area, that's where there are possibility to be securing profit from. Okay, so now let's see what happened. Okay, remember, we are selling from the high, and that high is a resistance. So that's where the sellers start from, by dropping the market down. So we are moving down, so grateful, we are still moving down. Then we go to our target. Okay, as you can see from our target from the low, that's where we start seeing the reaction of changing the direction again to the upside. So from the support, and even from this area, that's where we are expecting also the market to be moving to the upside. As you can see, we moved up again. So that's how we use support and resistance, or the highest point and even the lowest point. Okay, from this tools, support and resistance, why do we start from these ones to analyze the market? Because as we use the other tools like trend lines, okay, trend lines, if we are using indicators, that's where we stand from, and even those lowest and high point, we use this support and resistance, and other tools comes after with the purpose of looking for more confirmation. And what I can say in the market, the highest and lowest point, support and resistance, are very stronger than any other tool in the market. So if you want to analyze the market with the technical analysis, this is a subject you need to watch very careful and start using them on your backtest in the market. So you are going to be a better trader if you try to practice these tools. So guys, until next time, remember to subscribe on the channel, like the video, support this channel. Until next time, take care and be safe. Ciao.